CNBC TV 18, embarking on a quarter century of excellence.
Stocks closed mixed on Wall Street as Dow Jones and the S&P 500 closed with gains. The S&P 500 is now only 0.5% from hitting record levels ahead of the last trading day of the year. Stocks in the Asia-Pacific opened mixed on the final trading day of the year. The GIFT Nifty is indicating a flat start for the Indian market. Crude prices cracked. Brent falls over 3% to under $78 a barrel as concerns over shipping disruptions in the Red Sea ease, with major shipping companies resuming operations in the region. SEBI releases a consultation paper on clarifying market rumors, which requires the company's representatives to verify market rumors in case of material price movements within a stipulated period of time. RBI's financial stability report is sanguine on bad loans. Baseline projection expects stressed assets in the banking system to hit 3.1% by September 2024. Even under a severe stress scenario, bad loans are likely to rise to 4.4% of total assets. Good morning. In the Mumbai News Center, I'm Sonal Bhutra. You're watching Power Breakfast. This is the last trading day of the year and the first trading day of the January series. So we have a lot to catch up on and lots to talk about as well. But as always, let's take a look at the Asian markets first up, which are largely higher today. Positive cues from the global markets, that is the US markets. We do have Hang Seng, which has come in for some profit booking. Remember, it has been surging in last 3 trading sessions. So it's quite flat, but with some negative bias. The Taiwanese index is down around 43 points as well. But if we look at the other indices, the likes of Straits Times, there's Shanghai, most of them are higher in trade as we speak. So it's a mixed picture if we talk about the Asian markets as we speak. The GIFT Nifty, that will come up for you on the screen, and that one is indicating that it could be a slightly positive start for our own markets. Remember, we've been hitting new highs every day in last couple of trading sessions. So 7 points higher is what the implied open is, the one that GIFT Nifty is suggesting. Let's talk about the US markets now. Wall Street ended mixed. The Dow and S&P ended with mild gains, while the Nasdaq closed with a negative bias just below the flat line. For the year, S&P is up 24.6%, Dow Jones is up 13%, and the Nasdaq Composite has led the way with a gain of 44.2% and is on pace for its biggest annual increase since 2003. On the data front, the number of Americans filing for initial claims for unemployment benefits rose last week to 218,000. CNBC's Christina Partsinevelos gets to wrap up all the action on Wall Street.
Markets were mixed today. The S&P 500 finished marginally higher, but did near an all-time high. The Dow notched its 7th closing record for the month, and the Nasdaq hovered just near the flat line. So the Dow actually gained 54 points, the S&P 500 added 2, and the Nasdaq lost just 4. Initial filings for unemployment benefits rose last week, but remain at a level that indicates a consistent labor market. They totaled 218,000, 12,000 more than the week prior, but those figures are often volatile around the holiday season. The 4-week moving average, which provides a clearer picture of the labor market, actually fell slightly, and then you saw continued unemployment claims that are up since mid-September. Another potential hurdle for Boeing's 737 MAX jet. The company is urging airlines to inspect the planes for, quote, a possible loose bolt in the control system. Boeing says it's recommending the inspections out of an abundance of caution. Alaska Airlines, United, and American Airlines have all said the inspections will not impact operations. That's what's happening here in the United States. Back to you in Mumbai.
Okay, on that note, let's listen into some market opinion from Mark Zandi, chief economist at Moody's Analytics. He's talking about the likelihood of a recession.
I think the pessimism is fading away. I mean, clearly a year ago, I think everyone was on high alert, hair on fire. But with the better inflation statistics, the good economic news, that pessimism is fading away. Although you look at the surveys, I'm a little perplexed by it. Like, go take a look at the Blue Chip survey. I think the typical economist is still expecting, almost a 50% probability of recession starting sometime in the next year. Maybe that's going to change as we move forward here pretty quickly, but still some pessimism out there.
Okay, all right, that's a global market action, but how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning. This is a happy Friday, the last Friday as well of this year. But let's talk about markets because work will go on. So Darshan, what is the market setup looking like today?
Morning, Sonal. So the cues that we are getting from global front are looking mixed at this point for last trading day of 2023. So US indices saw a flat close after a range-bound session, but the positive cues are coming from crude, with both Brent and NYMEX falling 3% each overnight as tensions at the Red Sea have eased further. Onto our market, it was another day of record session. Sensex, Nifty and Nifty Bank have hit their fresh intraday highs, and Nifty has crossed 21,800 for the first time. Mid-caps, though, have relatively underperformed, and that was the reason market breadth was slightly in favor of declines. Onto institutional activities, FIs are buying even at these levels. If you look at yesterday's FI figure, they have bought shares of rupees 4,359, while sell figure for DIs were just rupees 137 crore. GIFT Nifty for today is indicating a start with minor gains, but it would be at record high. And for stocks to watch, autos will be in focus ahead of their monthly sales number, and also I'll be watching for oil marketing companies on two reports. First, sharp fall in crude and reports around price cut.
Okay, all right. Of course, those stocks, they have been surging in how. Thank you so much, Sudarshan, for joining us with all those cues. But Hormaz is joining us now. Hormaz, is the list as long as any other day?
It always is, isn't it? Even if it is the last day of the year, regardless of it. Start off with some PSU banks today, and Punjab National Bank yesterday in its board meeting announced that it plans to raise around 7,500 crore rupees in FY25 via QIP and other methods. And additionally, it has already raised 1,150 crore rupees through the issue of 81 bonds, which is at a coupon of 8.5% per annum. And Bank of Baroda, if you're a depositor, there's some good news for you. The bank has revised some retail term deposit rates for various tenors higher by 125 basis points, a steep hike there. Three banks will be in focus: IDFC First, IndusInd and RBL Bank, all three of them, because the Reserve Bank of India has given approval to ICICI Prudential, AMC and ICICI Prudential Life to cumulatively acquire up to 9.95% stake in all these three lenders. Swan Energy, where the board has approved raising 4,000 crore rupees via QIP and other ways. Azad Engineering, which listed yesterday, some marquee investors there. It has another addition to that. The Abu Dhabi Investment Authority has bought close to 4 lakh shares in the company yesterday at around 719, which is the listing around about the listing price. ICICI Lombard, it had received a show cause notice earlier. Now it has received an order for the GST demand for almost 1,700 crore rupees and a penalty worth 170 crore rupees additionally. Satin Credit Care, it has entered into a co-lending agreement with Karnataka Bank to lend to microfinance borrowers. Aditya Birla Fashion has increased its stake in a subsidiary from 58% to 63%. Info Edge will invest 25 crore rupees in a subsidiary. And lastly, Shree Cement will hold a board meeting on the 31st of January to consider an interim dividend. Back to you.
Yes, the list is as long as the year itself, Hormaz. So thank you so much for that. But a lot of action in the F&O space as well. Manglam is joining us now. Hey, Manglam.
Well, I will say Happy New Year, largely because in the F&O space, the new year has started already. We are welcoming Jan 2024 series. The only thing about January is that it's a relatively softer month, because if you just take a look at the last 5 Jan series, 4 of them have been on the obverse side, but not by much, just about 1.5%. We've seen last positive Jan series come by in Jan 19 itself. And this also on the back of the kind of moves that we've seen in both December as well as November. Nifty was up almost 1,650 points in the December series, which is the highest absolute point gain that we've seen in the market in the history. And the last 2 series itself, we've added nearly 3,000 points. Nifty's 8.2% gain in this series is the best since February 2021. So definitely this was a record-breaking series, as we saw and as we experienced as well. But with this record-breaking series, the FIs have rolled over their positions. The overall market positions have been rolled over much higher than the last 3 months as well. So nearly 80% of the positions have been rolled over as compared to last 3 months average of 77.5%. Those are the series moves, and now we have the rollovers on your screen. Importantly, not only are the rollovers higher, the open interest also is on the heavier side, close to around 1.29 crore shares. The last 3-month average is just about 1 crore shares. So rollovers higher, positioning on the higher side by about 30-odd%, and most of these positions are on the long side itself. The FIs start Jan 2024 with a 70% long exposure. That's the highest that we've seen in the last many months. And here's where the bit of a concern is. Why is that? Because if you take a look at it, the last 4 or 5 times the FIs have started the series with 70% or more long exposure, we've seen a bit of a dip in the series itself. Case in point, December 2021, the FI started with 70% longs. The Nifty was down 330 points. We had December 2022 as well, 77% long exposure. The Nifty was down 300 points. Jan 2024 starts with 70%. Let's see where we go as well. What would be the key triggers then? The third quarter results and commentary, most important. Pre-budget conversations. This time around, it's a vote on account. So let's see how that pans out. And global markets and yields are something that we'll be watching out for too.
January feels like the Monday of the week, right? But guys, thank you so much for joining us and prepping us up for the trading day ahead. Time for a short break now. When we return, market regulator SEBI has released a consultation paper on clarifying market rumors. We'll get you all the highlights on the other side. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. It's time to get you some more updates now. Market regulator SEBI has floated a new consultation paper on rules pertaining to companies issuing a clarification on rumors. Yash is here to tell us more and what would it really mean for companies. Yash?
Well, Sonal, as we close down year 2023, this is another very important consultation paper which has come from market regulator SEBI. And, with the various discussions which have happened, I can tell you that there has been a lot of work which has been done between the listed entities and market regulator to bring this consultation paper out. This is on essentially, laying down regulations with respect to listed companies, verifying market rumors. Here, market regulator SEBI has made one very important change, which is the basis of this consultation paper itself, which is that now material price movement in a stock due to some market rumor in a notable publication will require a confirmation from the listed entity. This is instead of it being a material event. So that's a basic change which has been made. Here the obligation will be on the promoters, directors, the KMPs and senior management to give adequate, accurate and timely response as far as any market rumor is concerned. Now I'll break this up into 2-3 parts. First one, what will be considered a material price movement? There is no specific number which has been given by SEBI, but just to give some details on this thing, SEBI says that a lower percentage of price movement in securities which are in a high price range or a higher percentage of movement for securities which are in a low price range will be considered as material price movement. The price variation in the security will also be indexed to Nifty 50 as well as Sensex movement on that particular day. Applicability, this will be applicable on the top 100 listed companies for February 2024 and top 250 listed companies from August 2024. As far as the timeline is concerned, the rumor needs to be verified within 24 hours of the material price movement. Finally, as far as stakeholder comments on this particular consultation paper are concerned, they need to be submitted by January 18, 2024.
Okay, all right. That's an important update, a consultation paper right now, but we'll have to see what this would mean for the listed universe. Moving on now, the Reserve Bank of India has released the Financial Stability Report for 2023. The central bank is largely sanguine on bad loans in the financial system. RBI expects gross non-performing assets at 3.1% of total assets by September 2024 in its baseline scenario. The GNPA ratio moves slightly higher to 3.6% under medium stress scenario and 4.4% under severe stress scenario. For public sector banks, the baseline scenario for gross NPAs is projected at 4.1%. This is under severe stress, and under severe stress scenario, the gross NPA ratio moves up to 5.1%. Okay, on that note, we'll slip into another break. Up next, we'll get you all the cues from the commodities market. There's a lot of movement there. Stay tuned. Welcome back. You're still tuned into Power Breakfast. Well, crude prices have cracked overnight, slipping 3% to under $78 a barrel as concerns over attacks on ships in the Red Sea ease. Major shipping companies have also resumed operations in the Red Sea and the Suez Canal regions. Energy aspects, Amrita Sen spoke to CNBC on how crude prices are likely to play out in the new year. Let's listen in to what she had to say.
We're going to start next year very similar to where we started this year, right? Like the high 70s for Brent, maybe flirting with $80. I actually think, again, much like gas, the bad news is priced in. We have seen huge number of long positions just exit the market. The high frequency guys have come back in a little bit, but generally speaking, the market is short. There's barely any geopolitical risk premiums in the price. The Houthis have been attacking vessels in the Red Sea, and we've seen diversions, but none of that has actually managed to really lift prices. Are fundamentals screaming bullish? No, absolutely not. As you say, demand is softer, and OPEC is doing a phenomenal job in actually keeping the market in balance.
In fact, sources in India's oil marketing companies say a fuel price cut is unlikely if crude prices remain above $75 a barrel. My colleague Sapna Das is joining us with more details. Sapna.
Well, what we are given to understand very clearly from industry players is the fact that they may have to reconsider any possibility of an imminent fuel price cut, and that's because of the situation in Red Sea. A few days back, crude oil had fallen to around $73 a barrel, which had given rise to this hope that a fuel price cut could be imminent, but since then it has gone back to the $80 level. OMCs very much want crude prices to be back under the $75 a barrel level. Preferably around 72 to 73 would be a right band for them as far as taking a decision on a fuel price cut is concerned. And not just that, they would want the prices to be stable, on a sustained basis. Maybe around 2 to 3 odd weeks is a good window for them. In order to measure that sustainability. So given both these facts, geopolitical tensions need to be kept a close watch at, volatility in crude oil prices, and within that, crude coming back to the under $75 a barrel level is what OMCs are looking at. So it's most likely that a fuel price cut is not imminent at the moment, but the window doesn't close. The window does remain open depending on these factors, how they play out over the next few days or next few weeks. And plus, it's an election year, so that possibility can never be ruled out in terms of some relief being given to consumers. But yes, safe to say at the moment the possibility is nil.
Okay, there is a possibility. All marketing company stocks, they were in focus, up anywhere between 6 to 9% yesterday. Now let's focus on the cryptocurrency space, where India's Financial Intelligence Unit has issued compliance show cause notices to 9 offshore virtual digital asset service providers. This includes crypto firm Binance. The Finance Ministry has also told the Information Technology Ministry to block their URLs for operating illegally in the country and for not complying with the local money laundering laws. Okay, this is a story for which we'll keep getting you more updates. But with that, we'll take your leave on this edition of Power Breakfast. But do stay tuned. Bazaar Morning Call comes up next with all the market action.
CNBC TV 18, embarking on a quarter century of excellence.